If you can be average for a long time, you can beat almost everyone. 5 simple money habits. 1 big result. Time beats talent. Today, you'll learn 5 habits that quietly build real wealth without hype, stock tips, or lucky bets. Before we start, tap subscribe, like, and the bell, so you never miss a daily money insight. Welcome to Money Studio, where we explain how money and technology shape your future. Why time beats talent. The market rewards endurance more than brilliance. Most people chase higher returns, the winners stay invested longer. When you let time do the heavy lifting, ordinary returns can produce extraordinary outcomes. Compounding is returns to the power of time. Take a simple idea and don't interrupt it. That's compounding. Earn a good, not perfect return and keep it compounding for decades. The exponent time does the magic, not the headline rate. Habit 1. Stay in the game. Your number 1 job is survival. Hold a diversified portfolio you can emotionally live with. Avoid anything that can knock you out. Excessive leverage, one-stock bets, or timelines you can't actually honor. When you build your plan around staying power, you make compounding possible. What the numbers say at a glance. If $10,000 compounds at 7% for 40 years, it quietly climbs far beyond a flashy 15% that stops after a decade. Consistency outruns intensity. Habit 2. Automate your savings. Save first, then spend what's left. Set an automatic transfer the day income hits your account. No decisions. No frictions. No, I'll do it later. Automation turns good intentions into behavior. Savings independence. Every dollar saved buys future options. Debt sells slices of your future time to someone else. Choose independence. Fund your future self. Habit 3. Buy the market, keep costs low. Index funds exist so you can own hundreds of great businesses at once. Fees are a guaranteed drag. Expected outperformance is not. If you can accept boring and broad, you can capture the engine of global growth at minimal cost. Time horizon dominates outcomes. 10, 20, 30, 40 years each decade multiplies the effect of even modest returns. Your edge is not day-to-day skill, it's decade-to-decade patience. Habit 4. Keep a margin of safety. Life happens. Markets fall. Jobs change. Hold extra cash for surprises and size your risk, so downturns don't force you to sell. A wide margin of safety keeps you invested when others capitulate. Habit 5. Don't over-tinker. Small, infrequent adjustments beat constant fiddling. The more you watch, the more you react. The more you react, the lower your odds of letting compounding work. Set rules in advance. Rebalancing once or twice a year is plenty for most investors. The simple, boring, powerful plan. 1. Auto-invest monthly into low-cost, broad index funds. 2. Keep a cushion of cash for emergencies. 3. Rebalance on a schedule, not on headlines. 4. Increase your savings rate whenever your income rises. 5. Protect your time horizon. Don't take risks that shorten it. Behavior beats spreadsheets. You don't need the perfect model, you need behavior you can sustain. Pick a contribution you can live with in your worst month, not your best. Make your plan survivable, then let it run. What about lifestyle now versus later? You're not saving to never spend. You're buying freedom. Plan small celebrations along the way, a weekend trip, a special dinner. But keep the core habit automated so the future still wins. If you're starting late, focus on what you control: savings rate, costs, diversification, time in the market. Start now, compound tomorrow, repeat. Quick recap. Time beats talent. Save automatically. Own the market at low cost. Keep a margin of safety. Don't tinker. If this helped, share it with one person who needs a calm plan, not a hot tip. This is Money Studio. Subscribe, like, and turn on the bell for more daily insights on economy, investment, money, real estate, finance, gold.